Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil markets. I'll start with Paris rapeseed. I am going to selectively reprise relevant parts of last week's commentary as they have become very, very relevant this week. And I quote, "The neckline, currently at 512.25, has been mostly very supportive as an uptrend. I know I am optimizing beyond possibly what may seem reasonable, but please bear with me on this. If we set aside the island bottom in June, then we've had 5 touches of this neckline so far." That's the end of the first quote. Then again, and I quote again, "Meanwhile, on top, the market had recently been capped by the projected 50% Fibonacci line at 548 on a closing basis. So what's going on? Well, there are 1, maybe 2 patterns that seem to be emerging, and they are big ones. The larger is a March to date ascending triangle pattern. This one includes the island bottom in the pattern, and it has the upper trend line currently at 563.5, a little over the July high. The lower uptrend trend line, currently at 499.5, is below the medium moving average, currently 520.75. The second pattern is more shallowly bullish pattern. It is to look at the neckline again, excluding the island bottom, as a possible lower bull channel, with the upper bull channel line being at the same connected high as previously mentioned. Both patterns are currently bullish, as the island bottom dealt a severe blow to any bearish incentive. And that's the end of the quotes. Okay, that sums up the 2 huge patterns that are evident here. So why are they important now? Well, we are seemingly breaking up again through the top of both of them, and this time it looks serious. So just in case, if it is, here are some ideas topside for both patterns. For a bullish ascending triangle, look to add €54 on top of the confirmed break up and over the upper trend line. For a bull channel, look to add about €51.25 on top of the confirmed break up and over the upper trend line. Now, reluctantly, as I'm still not convinced this is the break upwards as yet, I have nevertheless placed target X at 617.5 for the former pattern and target X1 at 614.75 for the latter pattern. Now I'm fully prepared to retire these 2 in a heartbeat if I'm not happy about them. But you can see them sitting in the upper right hand corner of this daily chart. Winnipeg canola. So we have fully exited the unsustainable ascending expanding wedge pattern, and rather than move down to a potential target below, we have instead walked straight into another pattern, and maybe more than one pattern as well. Now going back a bit, I said 3 weeks ago, and I quote, "I do know that there is significant congestion below between 760 and 820, containing interesting looking moving averages as additional supports, and that we may have another smaller band between 702 and 729 in which the long moving average, currently 742.20, which has actually exited, it was about to enter it. It did enter it, and it's working its way through and out of it, and already on top of it." End of quote. So that explains the downside. The top side is fairly simple. It's the upper trend line of various patterns is the May to date downtrend, currently 906.90. So what patterns do we have? Well, I originally thought a descending triangle between the upper trend line and the top of the congestion band previously mentioned at 820. Though originally formed since July, this is still there, but I'm having doubts about it. More recently, we have a sideways triangle formed from the somewhat optimized early July to date uptrend, currently at 845.10, and the same upper trend line. There are 2 others I would like you to remember, though I have issues with both of them. The possible July to August double top. This one looks like it is no longer valid. and may likely retire it soon as an idea as well. And there's the mid-June to date action as a sort of bullish halfway hesitation. This latter one is way too early to contemplate at this time, but I'll leave it out there as an idea. I cannot give any targets yet on any of the triangles, as we haven't broken either way, but I will leave this with you on the sideways triangle and give you an idea of the size of the move both up and down once there has been a confirmed break of either of the trend lines. A move up will be about 94 Canadian dollars, whilst a move down would be about 58 Canadian dollars. So I'll leave that with you to contemplate, as I am contemplating it. Bursa Malaysia crude palm oil. Okay, so we've had a bull channel of sorts, with the market eventually breaking out the downside of it, but then traveling along the underside of the lower bull channel for 2 weeks before really dropping down last week. In the process, it left late July and early August as a possible double top. This looked like the real thing, and I even placed a target X in the 4150 area, initial target X there, and a secondary target X1 in the 3955 area. However, last Monday's combined key reversal up, bullish engulfing pattern, and lower bullish opening white Mariboso, all three of those, they both tempted it, and at the same time stamped all over that idea with heavy boots. I'll leave them on the chart for a little while longer, but what else does it leave us with? Well, we still have the bullish Andrews pitch for the 2021 action. The middle time, currently at 45.85, seems to have been, and probably still is, acting as an attractor of sorts. This bullish Andrews pitchfork has been a bit of speculation on my part, as apart from the previously mentioned bull channel, there seemed for a while to be no clear pattern I could see in either the upside or the downside directions. So what else do we have? Well, there are two ideas I'd like to float by you. The first is an overtly bullish one, and the second is an extension of something earlier. The first is that the action since mid-June is a possible huge bull flag type or bullish halfway hesitation action. This is still early yet, but I wanted to air the idea so we could all think about it. It would be a huge move if it happens. So more on this in the future. The second is an extension of a previous idea. It is that the former double top becomes a triple top. Now, I have a very limited appetite for this idea, but I thought I would put it out there just in case. Finally, I would like to talk about something I'd highlighted over a number of weeks. The bow tie formation made up of the three moving averages. The short moving average currently 44.53, the short medium moving average that's currently 40.98, and the medium moving average currently 41.37. Now, as I've said many times, before you get too excited, the entry of all the three moving averages, well, they were in the wrong order for either a bullish or bearish bow tie. It was just messed up. However, that being said, crossover is still there. So, in a bow tie formation, the three moving averages come together to a single point and then spill out looking like an idealized representation of a bow tie. The thing to remember is that bow tie formations see the market move in the direction of the moving averages exiting the bow tie, ideally. Here it was upwards, though things sometimes change before the timing is over. Next, there is the timing. Between 15 to 20 trading sessions after the crossover, we ought to see the start of a move prompted by this bow tie crossover. Personally, in this case, the crossover happened on the 23rd of July. Therefore, between the 13th and 19th of August, we should have seen the results of the crossover. I extended it a little to the 20th of August on the fast leg to take into account holidays, etc. Now, it was an impressive move last Monday with that bullish pattern, which has offset the bearish incentive. But overall, we went into the bow tie in the wrong order, though it still looked like a bullish bow tie. And during the key period, the market fell, though having since recovered. Let's be honest, this is as much use as a lot of the earlier stuff on which helping to decipher the market. So perhaps it is a sign of some of the severe indecision I suspect may be coming to a cusp, perhaps soon. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZD Tofpik and ADM Investor Services International Limited. And here comes the final bit.